Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk CKOH. Pleasure to be with you. Pleasure to be with one of our two hosts. Mr. Millard has the afternoon off. So that leaves Mr. Clark. How are you, my friend?
I'm doing good. Trying to stay
Good,
warm.
good.
It's freezing.
Yeah,
out
no
there.
kidding. You need to stay even warmer with snow on its way.
It's like the weather in Reno is acting like the markets, right? Every day it's just
Good
schizophrenic.
analogy.
And bouncing back and
Every
forth.
day something different. There you go. There you go. Yep, do you remember as a kid growing up? I still remember, I don't remember what grade I was in, but I was at the Reno Air Races, and it was over 4th of July weekend, and it snowed. And that was, I was like, I don't know, first or second grade, something like that. And it's like, ever since then, yeah, you just never know what our weather's going to do. That's for sure. Yeah, very similar on the stock market side, my friend. That's a great analogy. All right. Well, we will tell you, of course, what happened in the stock market today. But first, let me tell you what our real estate topic's going to be with Aaron. I asked Aaron to kind of give us, he's in the trenches each and every day, and to really give us a pulse of what he is seeing going on. And our theme today is the following: is 2026 becoming the year of the buyer? Is that the buyer's market, right? Aaron has alluded to over these last, few weeks, months, whatever the case has been. Things are shifting a little bit. Speaking of the weather changing and housing market changing, stock market changing, everything changes all the time. And so I wanted him to kind of go into some details and really answer the critical question: is 2026 really becoming a buyer's market? I mean, we've heard about inventories rising, homes sitting a little bit longer, price cuts showing up. So many different things that are now shifting over to more of the buyer side. At least that's what some of the data is showing us, but nothing will compare to Mr. Clark's knowledge because he is in the trenches each and every day. So Aaron, give us a little tease before I get into the stock market side of things, how close I am on this topic. Are we seeing a seismic shift, a small shift, a large shift, or no shift at all?
We are seeing a selective shift in
Selective?
particular aspects of the market. You want me to elaborate?
Elaborate. You piqued my interest.
All right, cool. You said a tease. I was just going to.
Yeah, I know.
So, in markets where it's hard to get in or you have special opportunities, you're still seeing a seller's market. So, for example, a neighborhood that is popular, small, few properties hit the market. When they finally do, everyone wants to jump on them. Properties that have a specific price point and something comes in with a good deal, quote unquote, right?
Mm-hmm.
Then it doesn't sit. It moves along well. The seller feels like it's a seller's market. Now, in a market where you have several of similar properties and you're not competitively priced, you're just trying to like match the competition, if you will.
Mm-hmm.
Then yeah, you're going to sit out there for a while because you have to have something that draws everyone to you over the competition. And as inventory increases, where you might have been one of 5 or one of 4 or one of 3, now you might be one of 20, one of 30 or whatever it is. And especially in large markets like the South Reno area, you've got a lot of opportunities and options out there.
Okay. So, I mean, those are very common traits in any real estate market: high interest rate, low interest rate, strong, weak demand, whatever the case is. But now, of course, like you said, unless it's a very specific, unique type of property, it is really now shifting over to the buyer's market side of things versus where it was the sellers not too long ago. When just real quickly, I'm curious, when did you start seeing that shift in that larger market where if we had a pendulum sitting in front of us, Aaron, when did it move from the seller's market to the buyer's market? Was there a certain month or months that did it, or market event that did it? Was it the rise of interest rates?
I would say when we kind of plateaued with our rise of interest rates and we were stuck there for a little while, you saw inventory increasing a little bit. So you kind of saw phase 1, and then I think you saw phase 2 when rates started to creep down a little bit, but buyers were kind of holding their breath, saying, "Well, I think they're going to go down even more, so I'm not going to do anything yet." And then now we're in the season of the seller, when people are getting properties ready and getting them ready to be listed. And now you're in inventory a lot in this market. Mm-hmm. And so now you're kind of seeing phase 3. So where buyers had to come in and kind of take it in the teeth on repairs and concessions or something like that, now they've got options and they have a little bit of power to say, no, I want this fixed or I'm not going to buy your property, and sellers need to fix it.
So I guess I can assume that it still sticks out in my mind. I think Corey, I don't think you were on the show at that point, but I think Corey was one that said it. where, and this was what, a year, maybe 2 years ago, when he was saying that buyers would literally come to the table, negotiating table, with a letter to the seller indicating why they should be the buyer of the property. I assume those days are gone.
Oh yeah, yeah. We used to call those love letters.
Love letters. There you go. I
Yeah.
like that. I like
So
that.
yeah, and they made some rule changes where you can't do it because it's considered unfair advantage or
Yeah.
whatever. But yeah, those days are definitely gone. Right
Gosh.
now, it's a buyer has a lot of good opportunity out there. Unless they're looking for something that's very special and rarely comes up, then they're going to get a lot of competition on it.
Okay. Okay. All right. Very good. Well, we got a lot of things to talk about with Aaron Clark. We definitely do that. Let's get down to what happened in the stock market today. So I want to take you back to this. Actually, I'm going to take you back to last night. I said on the show yesterday, a 1,300 plus point gain on the Dow Jones Industrial Average yesterday. Everybody was high fiving. We got a 45-day ceasefire. And I was kind of the wet blanket on the party yesterday. And I said, be very careful. I don't think it's sustainable. There's too many moving parts. And I won't go through everything that I said. Please, pick up the podcast or the YouTube and you can hear everything that I'd mentioned. Lo and behold, futures started slipping a little bit during the show. They really slipped overnight. Oil prices started to pick up pretty dramatically. And we carried that overnight. So it looked like today was going to be more of the same. Looked like I'm thinking to myself, oh boy, here we go. We're going to get back a lot of these gains that we so thoroughly enjoyed yesterday. Oh, in a worse level today, we're down a couple hundred points on the Dow. But what was really concerning is where oil was. I mean, when I did my first update this morning, Aaron, oil was up $4.46 a barrel at 98.87. At our highest level, at least when I was watching closely during my updates this morning, we're up about, I think it was 101, 102. So that equates to, over actually about a $6 per barrel gain, very substantial. And we had some time periods where it looked like it was a stock. It was moving so fast, just over and over again on the upside. Like, okay, here we go. So it looked like it was going to be a down day. We were down in the markets. We were up in oil prices, etc. Then, of course, here we are. As I said yesterday, we are 100% a headline-driven market right now. No one takes the time to evaluate and really put any common sense into it. But the headline came out today that Israeli Prime Minister Benjamin Netanyahu directed his aides to open direct negotiations with Lebanon. Now, those talks are set to begin next week. But get this, Aaron. Israel said, okay, yeah, that's great. We're going to have talks with Lebanon. However, we're going to continue to launch strikes against Hezbollah in the interim, which could, of course, lead to further volatility. That headline moved the stock market up, brought oil prices down. We finished up $3.49 a barrel just off of that headline. And again, you look at it and go, okay, so I'm going to sit down at the negotiating table with you and, next week. But in the meantime, I'm going to blow you to smithereens. And if there's anything left of you or any people left of you, we'll deal with that side later. Almost when I saw that headline, Aaron, it almost felt like a page out of Trump's book, right? Out of his negotiation book, which is, scare the hell out of them and threaten them and do that. But, oh, by the way, I still love you, brother, type of thing. You put your arm around them. And so once again, I sat there and I shook my head thinking, okay, headline first is good until I saw the second part of the headline, which is they're going to continue bombing them until these negotiations sit down. I don't know. You go figure. You just sit here and you scratch your head, as I say just about every day on this show. So that was the headline. We actually finished in an okay fashion. 76-point gain on the Dow, 0.58%. Our closing level is 48,185. NASDAQ rose 187.83%, and the S&P up 42 points, or 0.62%. So, you look at it, at least on the Dow side of things, the last 2 days, we're up, basically north of 1,500 points. Not too shabby, not too shabby. So I think, as I said on the show yesterday, I think the most important thing about today was we didn't severely go in reverse and start wiping away those gains of yesterday. I don't care what index you look at or stock, et cetera. That was the real positive today. I think the other positive today was, even though oil was up, obviously nothing substantial compared to what we've seen, it wasn't enough to, again, use the excuse, all right, oil's up a couple bucks a barrel, let's reverse it in the market, let's start taking some profit. So I think today was a real positive day overall, considering that headline I just shared with you, and of course, not giving the gains back from yesterday. All right, we had a very busy day on the economic calendar. I want to come back and hit that. We'll hit oil, gold, treasuries, etc., and we'll even talk about the 30-year mortgage in the absence of Mr. Millard. Speaking of which, let's go ahead and turn it over to Kristen Snow. She's in the Right Now Traffic Center. She's not not absent today. How are you, my dear? Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Aaron Clark. Dwight has the afternoon off. All right. Once again, we finished with a gain of 276 on the Dow, a 0.58% rise. NASDAQ up 187.83%, and the S&P gained 42 points, 0.62%. On the oil front, as I mentioned, a $3.49 increase, $97.89 a barrel. Gold rose $40.40, closing at $4,817.10 an ounce. Big goose egg, this ought to make you happy, Mr. Clark. Big goose egg on the 10-year Treasury, yield 4.29%. The 30-year mortgage, according to Mortgage News Daily, slipped 2 basis points to a rate now of 6.38%. So it's come down nicely, Aaron, over these last couple of days. Remember, what was it, Tuesday? I think we were at 6.44. Yeah, very worried, right? Exactly. So starting to move, a little bit in the direction that we want, of course. Now, very quickly before we get to our topic today, which is 2026 becoming a real estate buyer's market? Let me run through the economic reports of the day. It was a busy one. We had personal income come in. This is February's data, down 0.1% on personal income. Personal spending, kind of the sister report, up 0.5%. So on the surface, you may go, oh, that's not good, right? Personal spending exceeding personal income. That's the combination Wall Street wants. They don't want personal income rising because that creates wage inflation. They like to see the personal spending trump personal income because that means you and I as consumers are out there spending, which will equate to higher corporate earnings. So that's the logic there. Then we received the Fed's favorite measure of inflation, the PCE report, month over month, up 0.4%. That was in line with Wall Street's expectation. Year over year, up 2.8%. So remember the key on this one. This is, again, as I said, the Fed's favorite measure of inflation. This is the one they want to get down to that 2% mark, right? So we're just not budging. 2.8, got a long ways to go. On the labor front, got a little uptick in initial claims. The first time filing for state unemployment benefits up 16,000 for the week, but still a very historically low number of 219,000. The continuing claims down 38,000 to 1,794,000. And then the final report of the day was was the second final one. We got the final estimate, what we call the third estimate of GDP for the fourth quarter of last year. And that number went from 0.7% increase down to 0.5%. So again, the economy wasn't quite as strong in the fourth quarter as they initially told us that it was. But again, Wall Street didn't care too much about that one. They just brushed it aside. And then finally, when that was the final one, 7 o'clock wholesale inventories up 0.8%. They were looking for a decline of 0.2%. So not a good sign that you're seeing wholesale inventories building up. That means, of course, businesses are not selling what they have sitting in the warehouse in a real simplistic format there. Okay, Aaron, we got a lot of good time now, so I'm glad we're down through that. So let's start moving into our topic. So 2026, are we looking at 2026 now becoming the year of the buyer, right? So we find ourselves in a very interesting situation. We know, of course, that the consumers, as you and Dwight have alluded to many times over the last few months, a little bit on the skittish side right now, for whatever reason it may be. AI, again, I don't want to bring that up, but that's always looming. Am I going to lose my job to AI? And again, of course, all the volatility in the stock market. We all know that people feel wealthy if their 401k is doing well, and they feel poor if it's not doing well. Overall, I think 401ks are hanging in there very well. But let's talk about, Aaron, what you're seeing right now. Let's start with the inventory side of things.
Yeah, so, we are seeing inventory moving up, both nationally and locally. I think part of it's cyclical in the sense that we're entering the spring market when inventory naturally does. Usually right around that February, March time period is when the phone starts ringing. Hey, I want to sell my home. When should we get it on the market? And then you're spending, 30 days getting them ready, prepped, and then listed. So there's definitely like the organic, natural cycle of things. On top of it, I definitely think that, we've talked about this before, when you've had this market where it's been relatively unchanged for the last few years, you have a pent-up market of people that want to sell that might be starting to feel like, okay, now is the time I can get out there and I can do this. And it's increasing that inventory both naturally, but also because I think people are tired of sitting still, they're ready to move and rock and roll.
Yeah.
But then you have all this geopolitical thing that's happening. So we had this great outlook before the whole Iran thing of when Dwight was talking about, what was it, 4.5 weeks ago, we were at 5.9% on the 30-year. Yep. And so it was like, yes, we are going. We're there. We're like a train going downhill right now.
Exactly.
And then all this stuff happens. So we're kind of like When I talk to my clients, I've been kind of presenting it as we're kind of in a squishy market right now. Some people are sitting back and they're just kind of like, I'm going to see it kind of day by day, feel it out. Yesterday was a day that made people kind of go, okay, maybe it's not, I don't need to
Right.
sit back so
Yep.
much. I'm
Yep.
ready to jump
That's my
in.
point.
But then tomorrow, like, who knows what is going to happen. So we're in a squishy time period.
You keep bringing this up around the inventory subject, that we're not seeing a lot of movement as far as sells and buys unless it's necessary, like you've said, a divorce, a death, something along those lines.
Yeah.
So let's rule those out of the equation. For the person that does not have an urgent situation, what's their reason right now? What would you say is the number one reason they're looking to sell? Because it's not, they most likely are going to go from a lower mortgage rate to a higher mortgage rate. Is it, I've outgrown my home? What would you say at the top of your list is the number one reason that you're seeing people selling?
I'm seeing a lot of downsizing right now. So I'm seeing
Interesting.
people entering that retiree
Empty
kind of
nest
time
phase.
period.
Yep.
Yeah, and they're
Yep.
kind of like, well, I could keep what I have, but with the volatility, I'd kind of like to cash out and be a little bit more safe and comfortable and
Have some
put that in
liquidity.
the market with you, and doing stuff like that and buying something a little bit cheaper. And now they're paying cash. So even though they didn't have a super high interest rate or whatever, or a high loan, they're now sitting in a position where they have a paid off house and no loan. So I'm seeing a lot of that. I'm seeing a lot of families that, they bought what they could afford at the time period. Rates were really high. They expected to be there for a short time, and now they've kind of like crossed that borderline of how long they wanted to be there. And now they're just simply outgrowing it, and the numbers aren't so bad, if you will, to sell. They've got enough equity built up, they've got enough time, and upgrade. So mostly it's the upgrading, and then it's the relocation. It's the people coming from out of state, again, net positive population growth in Nevada, and they're bettering their situation from that perspective, which is a buy up, because they're going
Right.
from whatever
Right.
they had that was selling for way too much to here and getting a great deal.
Mm-hmm. Mm-hmm. Okay. All right. Very good. And then before we go to break, let's talk about price reductions. What are we seeing right now on the price reduction side?
Yeah, so price reductions are hitting, especially on those properties that I think were kind of hitting the market when we were at that 5.9, and the market was starting to look real good, and things changed, and then it kind of stalled out a little bit, stalemated. So those properties I think are kind of going, okay, I need to do something to move this train a little bit faster. And then we're seeing a lot of price reduction in homes that are formatted like everything around them. So they're
Cookie cutter.
all the cookie cutter. I hate to use that word because it's annoying
Yeah,
to
I
me,
know.
but they're the cookie cutter.
Yeah.
Like there's 50 options of that style of home,
Mm-hmm.
just with different paint and whatever, slightly different sizes. Those ones we're seeing the price cuts on a lot. Special
Okay.
stuff, not so much. That's
Okay.
just moving.
What's the real reason for that?
The real reason.
So that tells me that there is liquidity out there, that people are willing to pay for the right property. It's not like they're going, nope, I've got money, but I'm not, things are overvalued, inflated, et cetera. They're just waiting for the property that they want. So if you have a unique property, probably no problem selling is what I think is what you're saying.
Yes.
If you have, like I said, I know you don't like the term, but I'll use it, cookie cutter. So you got a track house, nothing really unique about it compared to many other homes in your neighborhood. Those are going to be the ones where you got to be a bit more aggressive, that we'll talk about on the selling, some incentives and so on and so forth, right? Is that the point?
Yep, absolutely.
Okay. All right, perfect. All right, Aaron Clark of Edge Realty, of course, joining us. Let's move it on over to Jack Saban. He's got news, traffic, and weather, and we'll continue our discussion. Hey, Jack. Back to the Jon Sanchez Show on Newstalk 780 KOH, joined by Aaron Clark of Edge Realty. Dwight again has the afternoon off. Well, once again, it was a decent day today in the market. Again, we did not want to see a reversal of the big gains of yesterday, and we didn't get it today. We finished up 276 on the Dow, 0.58%. Nasdaq rose 187.83%, and the S&P up 42 or 0.62%. All right, I've asked Aaron to bring us up to date on what he has seen as a realtor in this marketplace, because again, we're hearing that this may turn out to be 2026, the year of the buyer and not the year of the seller, as it has been for so many years. So we've just got started on the topic. Again, we asked Aaron, what are we seeing right now? Inventories are creeping up a little bit, homes sitting a little bit longer, no longer the bidding wars, no longer the love letters like we saw before. Aaron, let's move to our second point. The power of the seller right now is starting to fade. Let's talk about naming the price, naming the terms, basically being in control of the whole negotiation. Sounds like they're losing that power that they had.
Yeah, I mean, we had a position in the past where you had a seller that could basically dictate how they were going to proceed when it came to inspection issues and things like that, or any sort of discrepancies or anything that a buyer in a what we'd call a balanced or normal market would request to be taken care of. So, I mean, I'd have homes where it needed a new roof, for example, and the seller would say, instead of giving you the $20,000 you need to replace the roof or paying to get it done themselves, they'd give you $1,000. And it was like, well, if you want the house, I mean, it's up to
Take
you.
it or leave it.
Take it or leave it. Like, that's where they're at, you know? And they kind of had that power to be able to say it. And if the buyer didn't want to do it, then there was somebody else waiting in line. Yeah, those days are definitely not happening anymore. I mean, again, we're not talking about this very special properties where everybody wants it, because those are still having multiple offers on them. But your average market condition home, no, the sellers are having to do a lot more. When I'm working with sellers, and we do a walkthrough to determine the condition of the property and repairs and things like that we need to get done, a lot more of the conversation is, hey, here's my list of people that I have that can do all the work for you. We need to get this, and this fixed and done, because a buyer is coming in pretty cash poor. They want a good deal, but more than anything, they don't want a project, and they're value-oriented buyers.
There you go.
So
Okay.
you asked earlier before we went to break, what is the real factor that's pushing people? And what the real factor is that's pushing people to make that jump, even though it's a little more expensive, it's a little more this, it's a little more that, is there value there? The current situation that I'm in, is it going to cost some money to get it where it needs to be? Yeah, maybe it is. But I could buy this over here. I might be paying a little bit more, but it puts me, 80% more in a better position in my life for a couple $100 or even $1,000 more a month. So it's the value. So for sellers, they have to sell more on value by saying, look at my beautiful home. All those windows that are old, they need to be replaced. I replaced them. The roof, fixed. This, done. Landscaping, done. The house is in excellent condition. Now a buyer can just come in and live and enjoy it.
Where did this turn when you're talking about? I'll use the term turnkey properties, right?
Yeah.
I noticed you and Corey have been bringing this up recently, even to the point where a lot of people are selling their homes furnished, right? The buyers just want to walk in, turn the key. It's like, okay, now I can get my life going again. But I haven't been able to figure that out. Explain, how did we shift to that? Because it used to be the opposite, right? That was the joy of buying a home. It's like, oh, I want to put up my own curtains. I want to make it mine. I want to put my touch on it. Doesn't seem to be that way anymore. Why?
Yeah, because again, people are coming in spending all their money on getting into the house.
Okay.
So, we've talked about this a lot. Those concessions that people were getting, they weren't getting concessions for repairs necessarily. They were like, oh yeah, the roof needs to be replaced. Yeah, well, it's not leaking now, so I'd rather use the $20K to get my rate bought down to 0.5% and save me $200 a month. So people are coming in super cash poor, and in that regard, they don't have the luxury of necessarily moving in, having a great payment that they're comfortable with, and then paying somebody to come in and gut the bathroom and replace this and replace that. Plus, I was talking to Corey the other day. When you came into a house and you told somebody, hey, we should replace the carpet, they'd be like, well, how much does that cost? And the number is drastically different now.
Yes.
More than double what it cost even 5 years ago. So the cost to do anything is so expensive, you got to take a loan out just to get your carpet replaced.
Right.
So that's the other part of it. It's better for a seller to just get it done.
Gotcha. Are we seeing new home builders adapting to this also, where they're making, the new homes that I've bought over my life, that was one of the great things about it, is you could come in and say, okay, I'm going to finance the granite countertops in the kitchen. I'm going to finance a lot of my upgrades, so I wasn't coming out of pocket. Where is that now with these home builders?
They're still doing that stuff. They're doing more value upgrades that will help them get the home sold, because when they say, hey, oh, you want a fireplace, well, that's $30,000. That's not their cost, so they have some room in there to say, it was 30 but now it's 15, because we're going to split the cost with you or whatever,
Mm-hmm.
to get you to go, well, that's all I wanted was a fireplace. That's enough value
Yes.
for me to buy this house.
Right.
So they have
Right.
some ability, and they are doing that on a lot of incentives type stuff, or 50% off on all upgrades, or things like that.
Yeah.
So we're seeing
Yeah.
that.
Okay. All right, our third point is 2026 becoming a buyer's market. Of course, you have to talk about interest rates. That's where everything starts. And obviously, we wish Dwight was here to go through this, but we'll handle it. I'm going to make it real brief here. So, as we said, 30-year mortgage today, according to Mortgage News Daily, down 2 basis points, 6.38%. So we've been hovering around this, 6.4, 6.45, right around that area for the last few weeks. Best levels Aaron alluded to, 5.99 right before the war started. Broke that 6% mark. I remember joking with Dwight how happy he must have been that day when that finally happened. But once again, the best advice, as you've heard us say a million times, is you date the rate and you marry the property, right? So if all the other conditions are being met, as Aaron has alluded to, don't let a 6.45% mortgage stop you. It doesn't make that big of a difference. Again, you can always refinance down the road. So if you're sitting on the sidelines simply because of that, back to what we were saying earlier, there's too much volatility, right? The bond market, the stock market, et cetera, trading on headlines. As I said on the show yesterday too, remember folks, the bond market controls the mortgage market, right? It's not, we talk about the 10-year and all that stuff, which is a bond, of course, but in theory, the Ginnie Maes, the Fannie Maes, those types of bonds, again, that really determine what the mortgage rates are going to be. Those bond traders are not as optimistic as the stock market investor is in regards to this whole conflict being resolved soon, et cetera. So they're in no hurry right now. They're in no hurry. And that's why I'm saying this. The bond traders are in no hurry to plow into the bond market, which drives the rates lower, or vice versa. They're just kind of sitting on their hands at this point until they see one direction or the other where things are going to go. Aaron, as of yesterday, if you can believe this, there is only a 35% probability that we're going to get a 0.25% cut out of the Fed this year. That's it. 35% probability, and only one towards the end of the year. So the bond traders are going, okay, we know that inflation is still being sticky. Again, we got those PCE prices this morning. So the bond traders are not going to be your friend. If you think the bond traders are going to be your friend and start piling into bonds, which drives those rates down, it ain't going to happen, as the saying goes. They're worried about too many different things, and they move a lot slower than what the stock market does, which is, again, more headline driven. So I think the bottom line is, if 2026 is your year to make a move, don't sit there and try to time the mortgage rates. Just get the best you can. Talk to your mortgage professional, hopefully Dwight. Talk about it, maybe a buy down or something, but don't let that dissuade you of moving into that home. If you find the right deal, whether it's a new home or an existing home, just get in there, right? The rates will always work themselves out down the road as long as you can afford it, and so on and so forth. For me, not being a real estate professional, these guys are. You agree with that advice, Aaron? I mean, it's
Yeah, absolutely. I mean, if you can get in, this is how you get deals.
Yeah.
If the rates were to drop, not that they would, but if the rates drop to 3% tomorrow, every single property on the market's going to go up in price by $200,000.
Absolutely. All right. When we come back, we're going to wrap up with smart buyers. What are their strategies right now? The ones that are sophisticated, they're not really involved. They're looking at it more as the numbers. What's that smart money, as we'd like to call it? What are they doing? And then we'll wrap things up with Aaron. Speaking of wrapping it up, let's do it with Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk KOH with Aaron Clark of Israel. That phone number, sir.
673-6700.
Beautiful. All right, Aaron. So let's wrap up our topic. Is 2026 becoming a buyer's market with what I like to call the smart money, the sophisticated money, the ones that are making real estate investment decisions based on data, based upon facts, not what their heart is telling them? What are they doing right now? What are they seeing in this market?
Right now, it's important as a strategy to negotiate everything. So you want to make sure that, if there's something you don't like about the property, throw your offer on a document and throw it in and see what happens and see what kind of response there is. Because what you might be thinking is something that's going to destroy the opportunity is something that to a seller, they don't care about, and they're willing to work with you or whatever else. I can't tell you how many times I have a listing where someone takes their buyer, goes and looks at it. I call them for feedback or whatever, and Corey has the same thing happen. And they have some idea in their mind that the seller wouldn't be interested in doing it, and you got to drill them to find out what it is. And then they finally say it, and you're like, they'd be totally open to that. Write it up.
Okay, cool.
Yeah. And then they
that's a great
just
point.
get cold feet, and then they don't. So throw your hat in the ring. Put an offer in. What's the worst thing that can happen? There's no obligation. The seller says no. Or they counter you, and then you have a better idea.
Could it be that they're still of the mindset? I mean, I remember you sitting
There
behind
is.
this microphone for years saying people are just discouraged, right? They keep putting offers in, they're not accepted. So that's where they got conditioned to write, as you said, the love letters and realizing they got to come in at full offer or more. And again, now things have changed a bit. So do you think they're just the brain is conditioned to say, I don't want to disrupt this because I don't want to take a chance of losing the deal if I ask for this, this, and this?
Yeah, or you get 2, 3 offers on a property and you're like, hey, we got 2 or 3 offers, we're requesting a highest and best. And they don't realize all of them are below asking and all of them have concessions. So they automatically go, well, I must be the worst buyer in the situation, so I'm not going to keep going. When in fact, they were the best. They didn't have to up anything, but we still have to represent our clients that are selling their property to put them in the best position for that situation. So always try. You never know. There's no reason not to. So,
Great point.
Yeah.
Let's talk real quickly about inspections. We know this is one thing
Yes.
in a hot, seller's market. A lot of people were foregoing, which is absolutely against your advice. Inspections. What about that now? What's going on
Yes. Get your inspections. Don't skip them. Make sure that you're getting the house checked in every reasonable aspect, because those things translate to future issues down the road. And like we said, you can always refi. Well, you don't want to refi a house that you got to drop 50 grand into and pull cash out of it. That's not going to help you at all. So make sure you're getting your inspections and you're negotiating with the seller over issues. And if they're not going to negotiate, they're going to give you $500 for a new roof. Go find another house.
there? Okay. All right. Okay. Wrap us up. We'll give us, I don't know, couple points that person out there right now saying, yep, this is the year I'm going to be a buyer. I'm going to move up, whatever the case is. What are a couple things they need to think
if
about
I'm
right
a
now?
buyer right now, to position myself strategically to get the best deal possible, I'm going to tell my realtor to give me every listing that's been on the market for 30, 40, 60 plus days in the area
stale
that I
listings.
want. Yep, and I'm going to find, there's going to be things I don't like about them. That's why they're sitting there. And I'm going to negotiate the heck out of them. And that's how you're going to get the best deal. You're going to get concessions, you're going to get kickbacks, you're going to get repairs, you're going to get everything positioned so you can get the best deal on the house. Those will be the on sale.
Where's that stale point right now? Because I know that's kind of a moving target. Is it a house that's been sitting for, as you said, 30 days, 45? Is it the 60? Where's the pain threshold where people are like, okay, we got to get this thing moving. I need to move, and I've had it on the market for 50 days, 60 days. Where's that threshold right now?
I mean, right now we're like sitting around 2.5 months, I think, is the time on market inventory.
Yep.
But really, it depends on the area. So an outlying area, properties aren't moving as crazy as, let's say, a popular area. So that's where you need to sit down with somebody that's got your back, and they're going to analyze the data for you on your behalf. They will tell you, these are the ones. These are the ones that are the good deal.
Love it. And what's that phone number one more time?
673-6700.
That is the man you need to call. He will analyze. He will come back. He will tell you what needs to be done to get the best deal for you. Great job, buddy. I enjoyed working with you one-on-one today. That was a lot of fun.
Absolutely.
All right, brother. Have a great weekend, and I'll be back with you tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.